Everyone said Macy's was dead. Amazon killed department stores. Mall traffic is gone. The stock doubled anyways. Earnings are tomorrow. Here's what the FSR says about whether this move is real. This is Macy's 1-year daily data, predictability score of 65.4%, average rolling FSR of 93%, the most iconic department store in America through a data lens, and this chart has one of the most surprising stories of this channel. Every analyst has a price target below $10. Price grinds 11, 12, 12.50, 13, going nowhere for months. FSR holding 88 to 95% during the entire grind. Even at $11, downtrend has structure. The selling is patient and organized, not panic. Then around interval 61, the FSR drops to 78%, the lowest reading on this chart. Price is still around $13 at the time. We've seen this signal before. CIFR dropped before its 10x move. SOUN dropped before doubling. Dell dropped before tripling. When FSR collapses while price is still flat, something is building underneath. And then Macy's does something nobody expected. Price jumps 13, 17 in days, and keeps going 18, 19, 20, 22, 23 at the peak. What happened? Macy's announced a major restructuring, closing underperforming stores, investing in luxury through Bloomingdale's, cutting costs aggressively. The market suddenly realized Macy's is not dying, it's transforming. Short sellers who had been betting against it for years started covering simultaneously. A stock that was supposed to go to zero doubled instead. Price pulled back 23 to 17, back near the 18-yearly average. Then recovered 18, 20, 21 right now, back above the yearly average heading into earnings tomorrow. FSR during this entire second half oscillating between 86 and 95, choppy but not broken. 65.4% overall score reflects the massive move from $11. The round trip math is complex, but the underlying structure has held. Earnings tomorrow and FSR going in at 87%, dropping slightly on the right edge. Not the loud warning signal we saw with PA&W at 81% or Hewlett-Packard at 82%, but not the clean 95% we saw with Avgo either. 87 FSR going in earnings means the current trend has moderate structural support. The move from 11 to 21 has mathematical foundation, but not enough to absorb a big disappointment without damage. A beat with strong holiday guidance. FSR recovers above 92%. Price targets 23 again. A miss. 87% FSR means there's not enough structural cushion to hold $20. 93% average rolling on a stock everyone said was going to zero is the most interesting number on this chart. The market has been wrong about Macy's structural trend all year. By 150 million square feet of prime retail real estate, a luxury division growing double digits, a cost structure being rebuilt from scratch, that's not nothing. Watch that sliding window. If FSR holds above 90% while price stays above 19, the transformation thesis has structural support. If FSR drops below 84% on a post-earnings sell-off, the move from $11 got ahead of the fundamentals. Tomorrow tells us whether Macy's resurrection is real or a short squeeze story. All this data can be run at predictability-api.com. Link is in the description. Did you buy Macy's at $11 or did you believe the obituary? Drop a comment and subscribe for more. Breakdowns happen all the time. Thanks for stopping by. We'll catch you in the next one.